Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his long-running guest, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Nice to see you as well. I don't know if you've seen it, but Michael Burry has reactivated his Twitter account. This thing goes on and off more like a light switch, but currently it is on, and he is out saying we are in the biggest bubble ever. He has been through two in his investing career. Those were obviously the dot-com and the real estate bubble. He is out saying biggest bubble ever. And, I wanted to talk to you about Michael Burry, who he is. What do you think? Just kind of rap about that a little bit.
Yeah, exactly. So a lot of people know Michael Burry from The Big Short. So for everybody listening, he has a Twitter account that he'll delete tweets and he'll just,
Yeah,
delete the account
weird.
and then he'll take it off, put it back on. I think he has Asperger's or something like that. So he's he's a little wild, and there's nothing against people that have that, but I think he's a little just off and a little different, in how he operates. But there is a Twitter account called the Michael Burry Archive, and it has all of his tweets. So if you want to follow him, you got to follow him there because he deletes the other stuff, but that archive grabs it. He's got to know that. So I'm not sure what he's doing, but anyways, so he's always been, a contra trader. He's always, he made his fortune calling the housing market crisis, literally researching, people's mortgages, looking at the borrowers, like went through thousands and thousands of these things.
I think I give him credit and he was early, right? He may not have been the first, but he was early and he went big, and then he
went a little too early. And that's what his tweet said the other day is he's been through several, crisis and bubbles to learn not to be too early on shorting something. So I think he's learned his lesson there because it cost him, and it was just,
it almost ran him out.
Stressful.
It almost crushed him. He almost didn't hold on long enough.
Yeah, and it's easy to be a bull, right? A lot of things go up when the Fed's doing what it's doing, and it's been doing it since 2008 and 9. It's kind of hard not to be a bull, right? It's easy to be a bull. The hardest thing to be is a bear and be accurate about it. So to understand risk, be able to accurately calculate that risk, and then be able to sustain it when it happens, that's your real, counter trading, your contra trader, right? Or your contra investor, understanding that and going against the tide. Anybody can make money going up in a bull market. The real opportunities a lot of times are in those down markets. And, again, I always talk about you lead the market up and you lead the market down. And I've been, successful and profitable through both of those through real estate, even as values dip. You don't want to catch a falling knife, but you want to lead that market down, and there's an art to that. So you really have to understand it. And, but nobody wants to hear those things when you're in this huge bull market. But what he's talking about is everything is in a bubble. Everything. And there's no, everybody is calling it a bubble now on Wall Street, whereas before they weren't. Now they are. Everybody's talking about how dangerous it is, that it's just unprecedented levels. And we're talking, stocks, bonds, treasuries are in a bubble, the housing market. Everything, oil, everything is in a bubble right now. And, we've seen these things over and over and over, and we've seen cycles. The Fed is now pinned. They are losing, if not lost, all credibility. They're flat out ignoring it because there's nothing they can do without creating the worst financial crisis, even worse than 0809, if they act appropriately. So they're just going to ignore it and let it play out and just blame pandemic, blame, whatever they can blame, and say, hey, we did what we could do. We printed, we kept interest rates low. It wasn't our fault. So it'll be interesting to see if they take any action at all with everything, where we're headed now, because, inflation's escalating rapidly, at all levels. So that's what he's warning about. He's just warning that, look, this is unsustainable. It's going to pop, and he doesn't know when it's going to happen. And, he also made a comment one time that a lot of people didn't understand, is he said, like Bitcoin specifically, he said, if you don't understand the leverage that's in Bitcoin, then you don't understand Bitcoin. And a lot of people don't. They don't understand how leverage works in Bitcoin and how the largest exchange out there will give you 100, 200, times leverage. So, you can put 100 grand into an exchange and be trading on $10 million.
Oh my goodness. Really?
Yeah.
Oh, wow.
Exactly. And the way that works is, you can deposit, $100,000 worth of Bitcoin over here, or so many Bitcoin. And if you're a whale and you've got, 1,000 Bitcoin and you deposit, 100 of them over here, that turns into 200 times leverage that you can get out there and trade, without actually having to sell your Bitcoin. So you can prop prices up and drive prices and, things like that. People just don't understand the leverage that is there. And then these, stable coins that are backed up by commercial paper is kind of similar to the housing market. what really tanked the housing market wasn't just a bad mortgage. It was all the leverage in the system, because these mortgages were levered up as securities, 100-fold throughout the financial system, because of the way that all works, and the way banks lever up, the way these mortgages and derivatives were created and levered up, and the way all of these things happen. So that's why that was such a huge impact on the banks. So now some of the financial markets and the crypto markets and real estate all happening at once. I mean, it's pretty big stuff.
Yeah, I think there's a couple of things I'm really taking from Michael Burry's stuff. And again, I like to watch people that are kind of, I appreciate what Michael did, right? Again, he read the mortgages, right? How, like these CDOs, these packages, thousands of mortgages. He's like reading dry legalese. And I respect that, right? As opposed to just, playing momentum in a bull market, right? Because you're right, being a bear is hard. And the other thing I take from Michael is he says, like, you're right, it's assets. Everything is a bubble. and then finally, the last thing I took from Michael, because I did a research knowing you and I were talking today, he's like, if I could find a way to short the 30-year treasury, that's the trade today.
Right? Yeah, that's what I mean. Like when people say treasury's in a bubble, what do you mean? It's only, what are treasuries today? Like, not even 2% yet, or?
No, I don't think so. I didn't look. I
10 years, 1.6, 30-year might be pushing 2 or a little bit over. So maybe, what I mean is the bubble is down. So it goes the opposite way. Mm-hmm. And that's why he's saying you really can't technically short, a treasury. But that's a different kind of play all in and of itself. I'm not sure where 30-year is. I think it's over 2% now, isn't it?
It would have to be over 2% if the one I would think. I'm trying to find the 30-year. I can't find it.
Yeah. So it's very interesting times. And what's really interesting is now all of the bulls of Wall Street are coming out and going, hey, this is a very dangerous game that the Fed is playing.
Yeah.
And we're on a very unsustainable path. But at the same time, let's just keep it going while we can keep it going, but because there's nowhere else to go. Even treasuries, those yields are coming up a little bit, but it's still risk on right now. It's not risk off until the Fed changes gears. They have not changed gears. It's very tricky. It's very tricky. There has to be a deleveraging at some point to the scale that we're on. And I mean, then we're just passing trillions of dollars in stimulus and infrastructure spending, which, in an inflationary period is just going to add more inflation.
Yeah. I want to talk. I don't understand. I don't get it. We're going to spend, I don't know, call it $1 trillion between friends. And somehow that is Janet Yellen says, we're going to spend $1 trillion in hard infrastructure and it's going to lower inflation. I'm like, what? I mean, I can't, I don't see it. I don't understand. I mean, what am I missing?
They don't get it either.
Okay, good.
They're not putting gas in their car, and they're not going to the grocery store, and they're not, seeing anything. Everywhere you go, price go up everywhere because of this, because of that, because of labor, because of, transportation costs. I mean, fuel surcharges, every day you see something where there's a new surcharge being added to some delivery service, for this and that, which, rightfully so.
Absolutely.
It's just amazing, what's happening right now, and that they're just ignoring it, going, it's going to go away as soon as the pandemic's gone. And guess what? We're 2 years in, the pandemic ain't gone. Things haven't changed. And, the wage inflation and the change in the labor force that's put, an increase in prices and, increase in cost of doing business on businesses, that's not going anywhere, it's very, very interesting times. And I'm not quite sure what she's thinking. I don't know if they fully get it or fully understand, because again, none of them are operating a business. They don't have to make a profit. So they don't fundamentally understand business. They don't have to, that's the problem with government, and like a lot of people want to attack, the wealthy and this, that, and the other. And, they're not the problem. The problem is government. They are the ones that are spending the money, that are creating the problems. The wealthy are just using, legal tax, loopholes and tax laws, to minimize their taxes. So, you got to change that. And, if you want everybody to pay the same amount, then go to a flat tax, and, or a consumption tax, and everybody's paying their fair share, instead of having all these different things. But remember why tax loopholes were created by the politicians for power and control over business, industry, and to get money from wealthy. So it's don't go after the wealthy. You got to go after the politicians. And somebody had responded to one of the videos and said, well, how do we go after politicians? Well, you got to get involved in your community. You've got to expose these things, and you got to vote. You got to understand who's getting paid by who's writing the laws, and I tell you who writes the laws in this company. Number one, it's the insurance. Insurance is one of the most powerful institutions on the planet. They write your laws because it's all about insurance having to pay. So they're lobbying and spending hundreds of millions of dollars a year to lobby lawmakers so they get the laws written the way they want to get them written, so they don't have to pay. And then you have corporations and, wealthy individuals that are contributing, and that's just on the books. There's so much that goes on off the books that, and just look at how, all of the politicians are enriching themselves, like, Bernie Sanders and, Elon Musk, if you saw that little exchange over the weekend.
I did. I always forget you're still alive.
Hey, Bernie's got a net worth of $3 million. Is he giving that away to people?
No.
How much is he paying? Joe Biden's very wealthy. He's $10 million bucks,
I think
Nancy Pelosi, has Nancy Pelosi's 10x. I mean, she's worth, I can't remember what it is now, but I'm going to
look it up.
Amount.
I think it's 100 million.
Yeah. Since she's become speaker by, insider trading. So, that's why the laws are where they are and why they exist. And, that's who we have to crack down on as politicians. You got to have term limits. You got to, they can't be allowed to trade and do these things while they're in office. I mean, you got to, people have to rise up and take control back of the government,
Yeah, I'm going to look up. I'm typing in what is Nancy Pelosi's net worth, because the last time I saw it was crazy.
And that's really it. I mean, really, at the end of the day, you need term limits at all levels. Okay, all levels of Congress. Once you serve in government, you should not be allowed to serve in, private sector where you can benefit from that service of government. You should be whatever you did before you went and served. When you're done, you go back to that. You don't stay in Washington and continue to leverage that, power and influence and.
Nancy Pelosi in 2015 is the first thing I found. OpenSecrets.org is the source. And again, I just went to Google. I have no skin in the game. In 2015, she was worth $100 million, and she has only gotten richer.
Yeah, and it's not just, it's both sides of the aisle. So it's Republicans, it's Democrats, it's all of them. It's all politicians. Most of them are, maybe they start out thinking, hey, I want to make a difference. But as soon as their pockets get, filled up a little bit, they start heading down that path. And, the streets are paved with gold and, DC and state capitals, so that's where the money is made and the deals go down. So anyways, long story short, that's, who we need to as a nation to be, going after and reining in is the lawmakers, because that's where all these laws are created. It's not the wealthy that are creating jobs, opportunity. They're getting rich, sure, and I mean, it's their prerogative what they do with their money, just like anybody else.
So I just found one for 2020. She's now worth $190 million.
Yeah. Jeez. Yeah. And exactly. I mean, she's doubling it every year because, she's got the inside skinny, and all this money that's being put out. Why do you think it keeps getting put out? Why do you think, let me look at all the Fed people that were trading and selling all their stocks right before the peak,
Yeah, that actually is one of the reasons I think, I don't know if we've talked about this, but I think Jerome Powell will not be renominated because of that reason.
The Fed knows if they stop printing and if they raise interest rates, market goes down. What does that do to their own personal net worth?
Yeah.
You know what I'm saying? They know. I mean, so they have a vested interest to keep pumping and keep pumping it up, and all their, I mean, it's a game and, it's how it works. And, there's a lot of people that have benefited from that game, retirees and people that are in the markets and those types of things. But now it's very dangerous. And a lot of people are getting drawn into the markets and they're going to get, hurt when it does, delever, and it's going to deleverage at some point.
Yeah, I agree with that. Well, do me a favor, Greg, how can people follow you? Because you do amazing stuff every day.
Yeah, GregDickerson.com. That's where all my info is. YouTube podcast, GregDickerson.com.
Very cool, man. Thanks again.